Bollinger Bands, Fibonacci lines, supports, resistance, and trend lines. Are they useful in biotech companies? Or are they the astrology for traders? Hop in! We are in Taxi Biotech. Today we begin in the city of Prague, the capital of Czech Republic, a historical city with an astronomical clock on its town hall displaying a zodiac ring. If you want me to visit your city, leave it in the comments. Welcome to Taxi Biotech, a program to learn about news and updates in the world of biotechnology and to understand the impact on the stock market. The stock data I show here is a symptom of the direction of companies or the clinical trials and does not constitute any investment recommendation. This is pure entertainment. First of all, in this video we are going to differentiate between small and medium and large companies. In our case, small and medium companies are subject to high volatility. Anything can affect them, from the departure of an important employee to publications at conferences, like a small bakery being affected by a bakery with a better smell of freshly made bread in the same street. However, large companies are much more resilient and their stock price are more stable. The example I started with is a meme, like this. What I mean is, in the face of negative news, like a trial not meeting its primary endpoints, no supports will save you. On Twitter, some technical analyses are shared, like this. I'm not criticizing them or the users sharing their ideas, nor am I saying I could do it better. This is just an example that, when a clinical trial fails, no supports will save you. Take a look. Chimerix is one of the best performing stock of the week, up 300%. In our videos The Best Biotech Stock of the Week, we'll analyze this positive news and look for ways to anticipate it. However, no technical analysis would have predicted such explosive movements. Small biotechs are at the mercy of catalysis based on their news. We'll discuss this in our weekly video on the best performing stock with this news. Another Twitter user shared this chart. In my view, there is no use showing a 15-minute chart with a few support lines when the stock has already risen 300%. Also, small biotechs often see immediate stock offerings after a very good news, causing the stock to drop quickly, rendering technical analysis useless. We have Cure here, another top performer of the week, due to the possible approval of one of its drugs. Take a look. Another user on Twitter puts a support line on a 5-minute chart, expecting an upward move. Nope, it closed lower. There is another critical point with a small biotech, like this one, Bright Mind Bioscience. Look at the price gain and the volume, $150,000. This is an advantage for us because large investors can get in. They enter with millions of dollars. There are not enough shares for sale. As a result, small inflows of money have a significant impact. But if you want to sell, you face a large spread, making technical analysis even more challenging, as it requires price stability for reliable patterns. Here is another 5-minute chart showing a rebound, but nope for Selector Bioscience. So, do you hate technical analysis? Is it useless? I'll explain how I do it, okay? I have no idea, nor do I have a successful trader track record, but I'm clear that with small biotechs, fundamentals come first. If I am interested in a company for its scientific developments and financial balance sheet, then I look at its chart because it's true that it tells me a lot. It's just an additional tool for support my decision making. For example, I only use it when a chart shows some stability. I shared this chart on Twitter when this company had news, right where the arrow is. In my opinion, that news could break this resistance range where the blue line is, but it didn't close above the blue line that day. If I had seen a breakout or confirmation, I might have entered. What do I look at? Only if it is very clear, otherwise I ignore it. The strongest indications for me are long-term supports and resistance. If I see a breakout and confirmation after news, that's an entry for me. Moving average can also work in this sense, but in my opinion, they are much weaker. I don't pay much attention to Ichimoku. It seems weaker than EMA is. RSI is useful to know if it is overbought or oversold. But this kind of technical analysis in small biotechs has nothing to do with large companies, and you have to modify it to each case. Another example I share is Autolus. The molecule got approved at the green line. I consider the blue line a support. After the news, it hit moving average and Ichimoku without being overbought, and then it lost everything. Autolus has a lot of competition, it's true, but based on fundamentals, I would have entered. However, I would have needed confirmation of breaking those moving averages. That doesn't mean much because here it broke out and then, so that's why I say it's a support that can be used, and that's why it's the astrology for traders, because it's a belief that supports your conviction. So the summary would be this: ask for technical analysis for help when you need it, but keep in mind that the help will often be this. A different case is with large companies. These well-established companies are unaffected if a small biotech discovers something competitive. It's even better because they can acquire them. And that price stability is better for technical analysis. Lilly, for example, in these companies, although biotechs always has some volatility, they are more reliable. Here we see J&J and also Vertex. Why don't I ever comment on such large companies? Okay, let's look at their performance over the year. I selected some random large companies. Of the large companies I selected, only Lilly beat the S&P 500 with a 36%. This is my personal opinion. If I am in biotech, I want to expose a small part of my capital to 5x, 10x returns, and also minus 80%. To expose myself to plus 30% of minus 30% in a year by diversifying among large pharmas? For that, I would stick with the S&P 500 and avoid complications. Okay, it could be a bubble because the ETFs and everyone is thinking the same. Okay, but I prefer this rather than diversify in big pharmas. And that's what I try to do with Taxi Biotech, learn about the catalysis of small and medium cap biotechs to stay updated on biotechnology developments and try to achieve high returns by risking a small part of the portfolio, understanding this unique market. So, based on my experience, is technical analysis useful in small biotech stocks? No, because they have very large movements and technical analysis requires some stability. I always give high importance to fundamentals, and there are no indicators for the big catalysis that we like. But of course, it can be used in large companies, and I personally use it for confirmations when deciding whether to enter a stock, considering its many limitations. And we finish with the views of Prague, a city that I would like to visit. See you soon. Bye.